Everyone, and welcome to another live online interview here at RW Week. I'm Policy Based Strategic Advisor and Coordinator at RW Week, and I'm really happy you're joining us for this conversation. Today, we are talking about one of the biggest topics in digital finance, as always, how tokenization is changing the way people access real world assets. And our guest has a very unique story from building one of the early esports businesses during the StarCraft era to spending more than 20 years. That's almost how many years I live on this earth in global capital markets before founding Libeara. And that mix of startup thinking and deep financial experience gives him a very practical view of where this industry is heading. So we will explore what tokenization really means beyond the hype, why regulation matters, and how technology can make investing more accessible without compromising trust. Please welcome the CEO and founder of Libeara, Aaron Guak. Welcome, Aaron. Hope you're doing great. All good?
Absolutely. Thank you very much for having me. And you've given me such a comprehensive introduction that I don't know what else I can say. But absolutely delighted to be here and to share. Just like thousands of people and founders before me, a little bit about who I am and what's motivating me to try and make a small mark in this evolving but important milestone in finance.
Awesome. I think it's not a small mark already, to be honest, and we will prove that during that conversation that we're gonna have right now. But your journey is pretty unique. And diverse, from co-founding an early esports venture during your university years, working alongside Blizzard Entertainment, to spending over 2 decades leading capital markets across top financial institutions like UBS, URI, and Standard Chartered. Um, let's start from the beginning. How actually did you enter Web3 industry, and how did your early entrepreneurial roots combined with your deep traditional finance background shape your approach to building Libiara?
Well, I guess if you want to really take it from the beginning, it's interesting to note that despite being Korean, I grew up in Ghana, and then I went back to university in Korea to kind of understand the motherland. And it was during my time as a university student in Korea when we had the Asian crisis, and obviously that built a whole different perspective in terms of how things operate and work, and how a huge turmoil of change that I personally experienced. So I think all of these small little changes. I think I've always been someone that's curious to push the boundary, understand how things operate. Why is this way? I'm a big fan of history, a big fan of anthropology. Why do people behave this way? What is it that's driving this, innovation? So because of a multitude of different kind of backgrounds and kind of curiosity in general, I guess I've always looked at markets or life in general with a certain pinch of salt, if you will, and I think that's always helped me to really double click into the fundamentals of how things operate and why things should be, rather than take the status quo or the given paradigm as the answer. So yeah, I mean, it's a lot of these values that we bring into Libeara, where it's an evolving and nascent sector. There's a lot of promise. There's a lot of things that people can do. A lot of pioneers are attacking it from multiple different angles, and so trying to pull together my different experiences together with the awesome team that I have, and I think this is what we're trying to tackle the problem one step at a time.
Awesome. Well, that's a very interesting background. I didn't know all these details, and I think it explains a lot that your way of thinking, first of all, and that your way of thinking actually was shaped long before you entered finance. And growing up in Ghana as a Korean must have given you a very, very different view of the world from an early age. Then while you were
Indeed.
studying, you also experienced the Asian financial crisis, which changed the life of millions of people across the region. And events like that, exactly like that, show you very quickly that markets are not just numbers on a screen. They affect real families and real businesses, and the psychology behind people changing. And I also smiled when you mentioned your interest in anthropology. Maybe not everyone in finance would admit this thing as well, but I think that the bigger point is that you have always been curious about why people behave the way they do, and markets driven by people, and people are not always rational sometimes. So uh,
Absolutely.
yeah, and I think that those experiences seem to have become part of Libera's culture, where understanding human behavior is just as important as understanding technology itself. Two pieces of the puzzle. Wonderful. But
It's look, it's true. The reason why finance, for example, gets a lot of slack from you know researchers into um, uh, actual sciences, so to speak, is because it's not really a science. It's an observation of humanity, right? It's a collection of decisions that, like you said, not many rational people or robots aren't doing, right? So human beings are doing it as a collective of that. So looking into anthropology is exactly how you would try to decipher how people would operate, what drives people, and again, so this is stuff that I would love to dig deeper into. You
me
know.
too, to be
Ooh.
honest. I'm a big fan of psychology, um, and behavioral psychology as well, because I personally think that it impacts economics in a huge way. But in terms of that, it's not a science. I think a lot of people who gonna re-listen this will just scream at you, or will follow and give you some negative comments like, "No, you're wrong. It's actually a science. Oh, you
Yeah.
just patient. It's not right." But it's an interesting question. I will raise that on Twitter. Let's see.
I actually have a great book, kind of in the similar context to recommend, and it's called Debt: The First 5,000 Years. And that book actually goes through finance from historical context, from the viewpoint of a historian slash anthropologist, rather than a viewpoint of of a finance person. And it's actually super interesting because it really encaptures some of the stuff that I believe, in terms of why people behave in a certain way, what drives people. How did money come about? It didn't go from barter to money. There was lots of different things in between, and it was all driven by need and just natural human forces, right? And I think this is, again, if we think about it from a global capital markets perspective, it's the same question that I had, that drove me to build Libera, or to experiment to look at Libera, was really the question of, there's so many people that have a natural eligibility to buy certain products, but just because it's not available to them in a way that is easy for them to access, it just becomes difficult to get. And this is the problem that I saw running the debt capital markets business for Standard Chartered in the ASEAN region, where a lot of my clients were sovereign issuers, raising finances to fill their fiscal gap. and a lot of them were trying to sell more of their bonds to their own citizens, which should completely correlate because the governments are operating and borrowing money to build infrastructure that helps the citizens, right? So if you have excess money, why shouldn't you be lending money to the government? It should be a no-brainer. But because of the way capital markets evolved and because of the multitude of intermediaries that exist in that system, it's just not as easy to do, or it's very expensive to do. And this kind of inequality is what I look to try and change, which got me interested in blockchain as a technology, and to dig deeper into why is it that we have centralized, clearing systems? Why is it that money exists in the way that it exists today? Why can't things be 24/7? Why can't things be instant? And kind of got me into this rabbit hole of trying to solve for that, which is why Libeara is here today.
You're raising deeper and deeper questions. I love it. I love it. Because in the what I wanted to highlight, I really like the recommendation. I will chat with one of the AI, so so it can give me a breakdown of the book itself, and I will read it with my own eyes. I promise, at least some parts, because right now I'm not sure. Maybe during the night.
Audiobooks.
Audiobooks, yes, I will download it.
Although the trick with audiobooks is that you always have to hear it 3 times. I don't know if you've
Yeah,
heard this before. You only pick up 30% of what is actually said, so you need to hear it 3 times for you to actually get the.
but the major points you can always highlight. That's usually what I do. But yeah, that's very interesting. The recommendation. I will drop the name of the book later on in the comments, so our viewers and listeners can look through it as well. That the first 5,000 years, right? Okay.
That's right.
Okay, okay. I think it's a very important perspective because we often assume that today's financial system is the only way it could work, but history shows that finance has always adapted to new technology and new needs. And what also stood out to me is your point that the biggest problem is often not eligibility but accessibility. There are millions of people who are like allowed to invest in certain financial products but simply cannot reach them because the process is too complicated or too expensive for hello regulations, and that feels like inequality problem rather than a technology problem. And I like that Libera is trying to close that gap by making these high quality financial products easier to access without lowering regulatory standards as well. And in the end, maybe the most interesting question is not why blockchain exists, but why money and markets work the way they do. And once we understand the history, it becomes much easier to imagine how they might evolve over the next 50 years. But also another question that I have for you, I want to identify all the barriers in global capital markets, especially as you have a pretty vivid experience. Uh, During your time leading capital markets for ICN and Standard Chartered, you observed firsthand how high minimum investment thresholds and heavily intermediary layers kept everyday investors out of traditional fixed income markets. And we kind of touched on it a little bit already. Was there a specific moment or market friction that convinced you to step out of traditional banking to launch Libera under Standard Charter?
I don't think it was a singular eureka moment per se. So there was no jumping out of a tub and running naked. But the idea there was really something that built over time. Looking at and digging deeper into what was this driven by, and all of that background, and also to dig deeper into the technology. And it kind of culminated in a POC that we launched in 2019 to see if tokenized retail bonds could be created and allocated. And this is kind of was the first catalyst to to attempt this, and this is where the system that SC Ventures had was amazing, because it led me to be able to ask for some research money to be able to build out the tokenization engine without having to necessarily quit my day job and look for seed financing and go dig into it, and start kind of slowly but much more deliberately, and through the course of the end of 2019 through to 2022, we were really able to not only perform a number of POCs that gave us the confidence that, one, tokenization was in fact a venture class problem, that was big enough as a market to be able to attempt to build a venture around, and two, that we had a specific philosophy around how this should be approached and what we could bring to the table, and that became clear, and that really drove me to found Libeara in the beginning of 2023. So it was a slower journey. It wasn't a big bang moment, but again, since when we started experimenting in 2019, EVM didn't exist, right? So we were like, oh well, Ethereum has this amazing thing, but the gas is so expensive. Well, then let's look at something that has less gas cost. And one of the leading chains at the time was Stellar, and we started building on Stellar because it made a lot of sense for what we were doing at the time. So again, you can see there's a lot of evolution in a very short period of time that has happened. Again, when we talk about short period of time, you could think about it as long, you could think about it as short, but it really allowed me to build deliberately and really from a venture perspective, de-risk as we move along, and really discover and hone in on what our edge was, and what is it that we want to be contributing. And I think the philosophy here is interesting because we talked about regulation in a little bit as well, but securities regulations have evolved over the last, say, 100 years. And if you see a regular prospectus, it points you to a certain 1933 legislation in the US, and there's a lot of allusion to that. So if we talk about modern securities regulations dating back, say, about 100 years, a lot of things have changed between then and now, and a lot of the change was really rectifying some of the mistakes that humanity had made over the years. We talked about the Asian crisis. Soon after that, there was the dot-com bubble. Soon after that, there was the global financial crisis, and then many different markets had their own savings and loan crisis in between. And so all of these things, every time things like this happen, humanity and regulators learn a little bit more. And what they do is they don't bring in regulation just to bring in regulation. They bring in regulation to support and protect the little guy. And if you think about the philosophy of why blockchain or cryptocurrency exists, or the technology exists, it is also to kind of beat that inequality, right? So you can see that securities regulations and blockchain as a philosophy are very much aligned, and so just because we want to give access, ignoring 100 years of evolution in securities regulations is actually essentially making the same mistake again. So yes, we might be building a little bit slower, but building it deliberately, making sure that we understand, where the regulators are coming from. What is it that actually makes it compliant and investor protected, so that we're not only building, but we're building while learning from the mistakes that humanity had made, from a historical context.
Deep. That's deep.
So,
Thank
yeah,
you.
we're probably, everyone's sleeping now and
No, I'm not.
logging off very quickly.
I'm not. I'm like I I like deep thoughts, and I'm very much into philosophy as well as the psychology, behavioral one too. So I like your answer. Keep going, keep doing it. And I
Thank you.
also I find it pretty refreshing that there wasn't one dramatic eureka moment, and we love stories where everything changes overnight like this. But like really innovation, it usually much slower than that. In your case, it sounds like years of seeing the same market problems eventually led to action. The proof of concept work in 2019, I think that was the first step, testing whether tokenized bonds could actually be created and allocated in practical. Well, then next few years you kept learning, refining the idea and proving that this was more than just an interesting experiment. And by the time Libeara officially launched in 2023, you already had a clear philosophy about what value you wanted to bring to the market. And I also think it's pretty fascinating that when you started exploring this space, many of today's blockchain tools like EVM, Ethereum virtual machine ecosystem, were still in their early stages or didn't exist even in the firm we know today. Everyone now on calls, they're asking, are you EVM compatible? Like back then, it was not the question, right? And at the same time, financial regulation has been evolving for more than a century, of course. There are a lot of different parts, like regions, who are competing in terms of, I will be first who gonna approve this, I will be first who gonna decline this. So, anyways, often after mistakes though, not before. And after financial crises or like those regulations are being made, so you're building on top of the lessons they already taught us, and that's good. Like this is
Yeah.
a very thoughtful approach. Thank you. And that feels like a much more sustainable way to innovate than simply trying to disrupt everything at once. There are a lot of that, just like a lot of startups and founders who are saying completely opposite, and I'm just smiling in a completely different way right now. I'm smiling with curiosity and respect. So very interesting.
Yeah, but look, a revolutionary is only a founding father if they're successful, um, right? So, history is written always by the people that succeed. So the jury is still out there whether our view of philosophical ideal is the right one or not. But I think that the main thing is that I think every builder needs to have a view as to how they want to build. Of course, things will change, and you need to be flexible as markets evolve, and you need to understand how things are changing to your favor or not, and adapt accordingly. Evolve or die. Um, but having a well-rooted philosophy in terms of what is it that we see as our north star in terms of where we want to get to eventually. And I think that having that a little bit clearer, and keep reminding ourselves around that, I think is has been one of the driving factors for me as I get to past 3.5 years in venture building this time around.
Well, awesome. I have goosebumps even in terms of how you are approaching this. I love it. I think that's a very honest way to look at it. And people often call someone a visionary or a revolutionary, but usually only after they succeeded. Okay, but until then, the jury is still out. Every founder has to accept the reality. The ones who didn't, well, I'm sorry. You're not flexible enough. Evolve or die. It's one of my best phrases as well. I adhere to it too. So trying to learn as much as possible, and at the same time, adapting doesn't mean changing your core beliefs every few months. That's
That's right.
that's the difference here. I like a point that having a well-rooted philosophy gives you something stable, while everything around you is changing. Not even in your sphere, but politically, geopolitically, financially, everywhere.
Absolutely. Yeah.
But you have
Yeah.
to stay core to your roots. Though, as we were talking more about the philosophy that you're adhering to, you have famously described tokenization not as a futuristic revolution, but as a architectural archaeology, right? Uh, and a return to direct peer-to-peer ownership updated with modern regulatory safeguards. Mm, how does exactly this philosophy guide how Libeara tokenizes real-world assets like government bonds and money market funds compared to traditional approaches?
Yeah, no, I think it's again, it really stems from the searching into history as to why the way and questioning why is it that financial markets operate today in this way, right? Why are bond markets different from fund markets and different from equity markets? And it's all because the genesis of each of those were different, and the technology available at the time also drove how things operated, right? So, and I think centralization, or the central clearinghouses or securities depositories, was the best technology that they have at the time. And that made sense because that way you were able to get rid of fraud. You were able to get rid of people, my dog ate my certificate, type of problems, and that was the technology that existed, and it worked. And so for 2-3 generations this is what we've had. But it doesn't mean that life has always been like that. And if you think about, oh, but people didn't borrow money 5,000 years ago, in fact the book will tell you that it's actually not true, right? So people have been borrowing money, they've been pooling money together, they've been going into business together for centuries. And so how did they do it before? And if they did it that way before, wouldn't that be the more primitive or human centric approach to capital markets? And since we now have the technology that does not necessitate a central clearing counterparty to say that this is real and this is mine, then isn't that what we should be embracing? And in the meanwhile, rather than now that we know that's possible, then how do we incorporate 100 years of learning, of all the different crises that we've experienced in capital markets, in securities regulations, and put that into that, and put those two things together? And I think that's what we're really here about. There's a Korean proverb that says that you fix the fence after you lose your cows. And it kind of sounds completely counterintuitive, but it's because looking at it from a just because you lost your cows once, it's not that you're not going to be a cattle farmer anymore, right? So then, if you don't fix the fence, you'll never be able to get back to become a cattle farmer. But the idea there is that yes, it might sound counterintuitive that you're fixing the fence after you lose your cows, but in fact, that's precisely what you should be doing, because next time you don't lose them, and then you grow, right? And then you learn, right? So I think that iteration is what humanity has been doing, and so let's not throw that away. We embrace it, and then we change the way things clear.
Okay, I will remember that proverb. I didn't know that as well. But I love that this starts with the history instead of technology again. So many conversations about tokenization begin with blockchain. But you're asking a much more interesting question: why do markets work the way they do in the first place? When you look back, you realize that many parts of today's financial systems were built around the technology available at that time, and a lot of people judging it, but just accept that this is history now, and we want to try to build the future and use the knowledge that history gave us, apply human-centric approach, and move forward all together. And even securities depositories, custodians, and other intermediaries solved real problems back then. And after all, nobody wanted to hear, "Sorry, my dog ate my bond certificate." I love it, love it. I think that that infra made markets safer and more efficient for its time, for sure. But as you pointed out, many people think lending and borrowing are modern ideas, yet humans were doing both thousands of years ago, and the tools changed, but the basic human need did not. And of course, heads off regarding the human centric approach um, um, uh, to capital markets, because instead of asking what technology can do, you're asking how technology can better serve people while keeping the lessons we have learned over the centuries. So, and yeah, of course, I'll let me actually have a note and a reminder that I need to remember this proverb. This is important. Yes, 1 second. Done.
All
Um,
right.
awesome. um, all right, I think that we can stay here more than 1 hour. But I want to ask some more questions here. Um, let's talk more about Libera. I want to know deeper. You pointed out that while traditional institutions often view asset tokenization through the lens of back office efficiency, the vast majority of buyers are actually crypto native pools seeking risk free yield on chain, right? Um, we're still like in a in the middle between TradFi and DeFi. How is Libera positioning its platform to serve both on-chain liquidity providers and institutional asset issuers without compromising on security and other key points?
Yeah, I think it's an excellent point. I think that the main thing here is, when we talk about tokenization being able to solve for efficiency and solve for access, I always say that we're very much in the access game, because that's kind of the original North Star that has driven us, and I think that is a far more grassroots change as to how we can look at the capital markets of the future. But with that, as a side effect, it does come with efficiency, and those efficiencies are things that we'll definitely need to embrace. But it's not about efficiency for the sake of efficiency. That should be the side effect of actually trying to make things better for access, for better, broader distribution, for more accessibility. And again, I do want to say that, well, first of all, like, nothing is risk free. So it's not like, yes, there's you want this, and this. So there's always going to be a Venn diagram you're going to have to draw and figure out what your priorities are. But what we've noticed is that in the Web3 community, they may not have the same level of access as some of the more established TradFi money managers may have. And the idea is to bring as many different tried and tested Web2 strategies into Web3 form, so that Web3 investors can buy these and interact with them with the same level of investor protection that any other securities purchaser will have. And that's really what we're doing. And we started off with a collaborating with Wellington on a tokenized US Treasury fund. Now we've extended that collaboration and recently launched the income product, which is a mid 5% yielding, more broader fixed income strategy, which gives you a little bit of a pickup with a little bit more risk for sure, but in that, still in that fixed income range. And so building out the curve in terms of the different instruments, and therefore giving Web3 natives more choice in terms of what they can invest in, rather than just move with what's available or move with the fad, is what we're trying to build out. And again, the realm that we want to remain in, RWA is a big concept. And I always say there's RWA in securities, or in regulated assets, and which is why, for us, we like to say that we're in the tokenized regulated asset space, or the TRA space, where we're focused really on bringing traditional regulated assets natively on chain, so that, yes, it doesn't have to go through a CSD to exist, but it still, enjoys all of the different investor protection elements that a regular regulated asset provides.
Mm-hmm. Okay, let me digest it 1 second. Well, I think that the most important point here is that you're not chasing efficiency for its own sake. Faster settlement and lower costs are great, like good, but they're really a side effect of the bigger mission. I understand it, which is improving access, and that has been Libeara's north star, as far as I'm understanding from the beginning. And I also appreciate that you make it clear that nothing is truly risk free. One time on one interview, I already had that notification. I need to be more careful with that, and probably need to get a lawyer after the second attempt. Well, people sometimes use that phrase too easily. I guess I'm one of that person, but I
Well,
would
there
like
is a thing called risk-free rates, right? Of course, it's
to.
a different context, but yes. So, but there's risk. There's always going to be risk, right?
Nothing is risk free. Nothing.
Nothing is free. Nothing is risk-free.
Yeah,
There's no free lunch in finance. Yada yada
yeah.
yada.
Okay, you're trying to do what you're trying to do is bring trusted Web2 investment strategies into Web3 environment without reducing investor protection, which is more understandable for traditional world, right? The only problem going to be the education. Though that's why partnerships with established asset managers like Wellington are so interesting. It shows that tokenization is moving beyond simple products and into more sophisticated investment strategies. And I also like this distinction you make between the broad idea of real world assets and what Libeara actually focuses on. Tokenized regulated assets, right? Am I?
That's right.
Yeah,
Yeah,
okay.
that's
Uh,
correct.
I need to. Okay, let me 1 second. TRA. I'll make a post about this as well. Thank you for the inspiration. Bringing securities and other regulated financial products on chain while keeping the same legal standards investors already trust. So that feels like a practical approach because the future of tokenization will probably be built on confidence, first of all, as much as technology. Because right now, when I'm also speaking to different banks and asset managers, they tried to explore these ideas 2 years ago, but found out that market is too raw, it's too early, and they will revisit it in several years from now because, my personal opinion, lack of education. Because it's basically the same thing, but more. It's easy, but for them it's too complicated.
Yeah, look, and a lot of this is a daily evolving, um, you know, plane, and that's the beauty of conversation. There's the beauty of what we're doing here. For example, it's really the beauty of what Web 2 has given us that we can extend into Web 3. I mean, if we think about Web 1, Web 2, and Web 3, talk about how it's read write, and then read write and own. The ability to do that is what we're educating ourselves on. And again, I talk about the global financial crisis, but the reality of it is that it's only a small percentage of us that lived it as a mainstream investment banker now. It's been 20 years, right? So it's not like it's yesterday's event, and people read about it, people understand it vaguely, but having lived through some of these things, it does give you a different perspective on how you look at financial markets. I mean, when I started out in 2002 at UBS, the first project that I did and was involved in was the securitization of a credit card company's receivables into a dollar asset-backed securitization transaction, a cross-border asset-backed securitization transaction. I know we're saying a lot of different things, but basically, securitization is what ultimately, fast forward 6 years, led to the demise of a lot of big name banking giants, as well as the global financial markets. And securitization was born from a simple idea that when you have a range of cash flows, you can sequester and pay a certain tranche or sector first, and therefore giving them a better safety net than others. So pay me first and then you. So therefore, you're going to be lower risk, a higher risk than me because I get paid first. That's the simple idea. But what we realize is that if we all die, then no one gets paid, right? So it doesn't mean like, oh no, but you're lower risk than me, or no, but you're higher risk than me. No, look, we got no money. Then that's it. So when there's a systemic issue, then it's that. So it's a very simple concept if you think about it. Like everyone, like, oh, but that's what securitization was all about, right? So again, we could spend hours as to a lot of these things, and again, obviously there are certain things that I feel I'm qualified to talk about. There's certain things I'm not. But one thing that I could tell you, as someone that's structured over $180 billion worth of bonds in my 20 years in banking, there are things that you can compromise, and there are things that you shouldn't. Ultimately, building it right matters, and it's great to see a lot of our peer groups, globally, are getting this very similar message as well, right? People are getting the right licenses, people are building things right, they're respecting disclosure requirements. A lot of these things are changing, not just because they want to be compliant, because they see that that's the right way of building it. And I think once we have that movement, then everyone will benefit from this in the right way.
Okay. I have like 6 points in my head right now. Let me choose which way we're gonna go. Okay, first, we're now actually not in Web3 anymore. We're in Web4. It's a new thing. Read, write, own, build. AI agents, right? Now we're like evolution is everywhere, and now there is a new synergy: Web4, AI agents, and tokenization. Some of my partners they're just testing it out. AI agents are making first transactions for banks, and I cannot name yet, otherwise they probably gonna kill me. I don't even have an NDA, but they're gonna do it. I can tell you later. Our NDA is not on live stream. But anyways, one point that I wanted to mention is like reaching more than 1 billion in tokenized assets is a huge milestone, right? But I get the feeling that you don't see it as a finish line, and I think it's a really proof that this model can work at institutional scale, and it should work at institutional scale. What I also like is your view that not everything should be optimized or compromised in the name of innovation. Some things like user experience and speed can improve over time as technology evolves, but other things, investor protection, legal certainty, and of course, trust should never be traded away. I think that's a pretty important message because the blockchain industry has sometimes moved too fast and learned the lesson the hard way with different exploits or scams, etc. But I think that trust takes years, decades to build and only moments to lose, right? This is the phrasing that usually people say. But the fact that Libera has reached this scale while still staying inside regulated frameworks suggests that those principles are more than just marketing itself. And on that note, I wanted to actually ask you, as a founder, Mm, you're leading a regulated platform that handles hundreds of millions, a billion, in on-chain assets, and it requires like immense focus and discipline. Beyond managing multi-jurisdictional expansion across global financial hubs, how do you personally maintain focus and balance as a leader? Kathleen?
Oh, yeah, sorry. What's balance? No, yeah, I think just going back to some of your thoughts on trust, and there's a Dutch proverb that says what is it? Trust comes walking or arrives on foot and leaves on horseback, right? So it's always going to take longer to build trust. Trust is the cornerstone of finance, but also kind of the bedrock of which needs to be solid to build upon. Which is why, again, as we move into Web4, agentic, money management, in fact, some of the efficiencies that people are talking about is really or should actually be realized then. So we talk about instant settlement, T+0, like I give you it now and you just give it to me back instantly. A lot of people who talk about that have forgotten that human beings have fat fingers. And sometimes we press the wrong button, and that's not because we're being careless, but it's just because we're human. So in fact, when agentic payments and fail-safe type access happens, is when you need some of those type of 24/7 instant and always on type of systems, because human beings are not designed to do that. I don't know if you know, in the English keyboard, E is the most used letter, but it's on the higher plane, right? In the keyboard, where ASDF is, then E is above that, right? So if it's the most used letter, why is it not where you're supposed to put your fingers? Right? I mean, if E is the same one, then your right index should be where E should be, because that's where you use the most, for example. But it's because when they first developed the typewriter, if you hit it too fast, it sticks. So they deliberately put E away from where your fingers are, so that you're increasing the time it takes to hit the E. That's how technology has developed over time. They've adopted to human nature. So we always have to think about. So now again, all of this will change from an agentic point of view, and I would love to see that. And this is something that is fascinating as well, and I track it very closely. But a lot of some of these innovations need to come part and parcel with that type of new era, rather than trying to stick everything into where we are today. In fact, if you read the book, um, the it's escaping me now, but um, Thank You for Being Late is the name of the book. And in that book, there's a concept of how the speed of change of things are becoming faster and faster, more and more accelerated, that human beings are finding it more and more nauseous in a sense, right? So we're not, our way of life has changed so much in the last 300 years, whereas the 3,000 years before that was practically the same, right? So the speed of change, of evolution of things being accelerated, is actually putting much more pressure on people, and I agree, and so just like the E is placed in a different row, I think sometimes the pace of change has to evolve with people adapting to it.
I wrote that down
All
as
right,
well.
I've now talked about the two books I've ever read in my life.
Well, I sometimes when I meet you in person in Singapore, I will go away from these two books, and I will tell you more about Dostoevsky and or Tolstoy. So you're not gonna get depressed only about the speed of the change of the things, putting higher pressure, but now you're gonna be depressed also about the human feelings and how dark it's as well. Uh,
There's a lot of Russian literature around this. Yes, indeed.
yeah,
The human
but
psyche.
yeah, I mean, there is a saying that trust comes on foot and lives on horseback. I love it too, and that feels especially true in financial markets as well. It can
Yeah,
take decades to build reputation, and one mistake can damage it very quickly. But yeah, fat finger moment. I loved it too. We all know that feeling of clicking the wrong button. That's where technology, like AI, can become a helpful partner and not just a replacement for people. So it can help monitor, it can help check and support decisions in a world that is moving faster every year, sometimes every half a year. And I also like the book recommendation, thank you. I think that the challenge for leaders today is not only moving fast but knowing when to slow down, think carefully as well, and protect the trust that everything is built on. Because if you rush, you might accidentally forget something and just lose the trust itself. So that
absolutely. Look, I think like I mean, jokes aside, I think it's as a builder, it's easy to get very hung up on the next thing, and it's also very easy to just become overly competitive because the market's moving, and it becomes a source of giddiness around how to what you should be doing, and losing that. I mean, I try to ground that by really coming back to roots, coming back to family, coming back to what is it that we're supposed to be doing here on this earth, right? And again, to kind of sometimes um, trying to sit down and read a book, or play around a golf, and curse at the ball, and rather than taking it out on people around you. So I think that balance is super important, but not losing sight of why we're doing this. I think is the critical one. Um, you know,
okay. Okay, no,
yeah,
I get it, because like we live in the economy when you're scrolling the feed and everyone is successful, nobody shares the hard parts of the founder of the builder. Everyone is like, I achieved this, I achieved this, this is my vacation, this is my family, this is with whom I'm speaking at the conference. Look how big these guys are. Yeah, calm down, and like live your own life as well. We are all humans anyways, and the technology that we're building, it's all for the humans too. So awesome, and it's very
And it's a
helpful,
collective effort. It's
of course.
the telephone was developed by multiple people. It's not just this. It's not a one winner game. And I think we all need to understand that. And when someone innovates, look and learn, do a little bit better, and collaborate. And what we need to do collectively is to build a pie.
Yeah,
And that's what's going to change the world.
yeah, exactly. Exactly. And stepping away from the noise of constant change is very wise. I think that on that note, we gonna slowly wrap up our today's interview. I think that there were like a lot of very wise thoughts, and I think that there are gonna be a lot of great quotes as well from you. But yeah, Aaron, first of all, I would love to extend a huge gratitude. That was a fascinating discussion, and I hope everyone listening is living with a better understanding of, first of all, where tokenized real world assets are heading, and how to live a life, and how to think and view the world we live in, financial world as well, differently. Always looking back at the perspective of the history. One thing that really stood out to me is that innovation does not always mean replacing the financial system, but it can also mean improving the parts that no longer work well. So today's conversation showed that and technology and regulation, investor protection do not have to compete with each other. As the industry continues to grow, the companies that succeed will probably be the ones that build trust first, the technology second. Someone is trying to join the stream. Why now? I don't know. But yeah, sorry, I forgot what I was saying. Thank you, Aaron. If you have some
Yeah.
final thoughts to for our listeners, feel free to speak up.
Yeah, no, no. Well, thank you, Polly, for having me. Of course, it was a great conversation. Look forward to many more. Again, the crusade that you're on to educate and propagate the different aspects of what we're all collectively building towards. I think it's great. Again, in today's day and age, it's easy to remain in your bubble and continue to feed off of what you know. I would challenge everyone to try and extend out into realms that are uncomfortable and you're unfamiliar with, because there's also a lot of learning that you can get from there, that you can either bring back to what you do, or use as an avenue for slowing down and thinking about the problem a little bit better. So yeah, well,
Yep,
thank you for
exactly.
having me, and we'll see you again soon.
Thank you, Aaron. It was a pleasure. I will say it again. Hopefully, we can do more online interviews like this, or maybe we can invite you to online panel. And thank you to everyone who joined as listeners, as viewers. This podcast will be uploaded to Spotify, and we will be back soon next week. It was Polly Speaks, speaker, coordinator, philosopher, and a curious child of the Web3. Thank you. See you soon.